Conventional wisdom is that you were going to bounce because it got oversold. It went down fast. You were going to bounce, have a couple day rally or a few day rally, and then go to much lower lows. So you hear calls of 5,000, 4,800, 4,900 on the S&P, and some saying it's going a lot lower than that the top is in, etc. My guess is the lows for that correction are in, and that it'll take a little time here, but I think we're going to be off to the races again. We'll see new highs, if not this month, next month, probably this month though, and probably be. I think this may be the parabolic leg that takes us to the top.
Where we are in your melt-up thesis, has the recent, news and price action surrounding the yen carry trade and everything, resulting from that, the, dramatic and very quick sell-off in the U.S. equity markets, how has that impacted your melt-up thesis, if at all? What may expect, in the coming weeks with everything in the markets, with what has transpired in the last couple of weeks?
Yeah, it actually hasn't affected my forecast at all. It might surprise people, but it's actually reinforced the forecast. I know that's not a popular view out there. We've seen sentiment turn very bearish in a hurry. It's not so surprising, given as I've said on Twitter, we've had from October of 2022 an almost 85% move up in the Nasdaq and 62% move up in the S&P from those lows back at the bottom of the bear market, at the bottom of the bear market and beginning of the bull market. So they have such a long run, and with a few setbacks along the way. We've had corrections along the way, but I think people got accustomed to kind of seeing it go up every day, and so when it goes back down 1% or 2 or 3, I would see people get a little bit nervous. But then when it goes down, 7 or 8% in the S&P and 10% in the Nasdaq or more, it's they get really shaken up. So we've seen, as I like to say, we've seen a rebuilding of the wall of worry, and quite a nice rebuilding. So I think sentiment is quite bearish right now. Amazingly, again, we're not that far off of highs, but more importantly, as I have said so many times, the Fed doesn't really set rates. It's the bond market that sets rates. So, we had 3 months ago, everybody talking about 5% again on the 10-year. It was at 4.7, above 470, and they were extrapolating out and saying it's going to 5, it's going to 6, and it stopped there, and it's down 100 basis points from there in 3 months. That's a cut in rates. When you had a 100 basis point cut from the bond market, and the 10-year is a much more important factor in the economy, the Fed controls the overnight bank lending rate. So the banks square up with each other, lend each other money when they need to. Some banks have excess fund reserves, others don't have enough. And so that's the rate that the Fed controls. That's overnight rate. 10 years what's used to determine loan rates, mortgage rates, etc. So it's rather surprising that people don't pay more attention to bond rates and pay all their attention to the Fed. But that's unfortunately the nature of things. So that narrative was out there that, oh my God, the Fed's blown it. We're about to head into a hard landing instead of a soft landing, and it's the stock market's peaked, and down we went. And then to on top of that, you got the yen, which has been straight down for a couple of years, finally turned. The Bank of Japan announced that they were going to hike rates for the first time in a long time, a quarter point. I think it was a quarter. And again, the narrative went crazy. It was like, here we go. The yen's going through the roof, and the Japan's going to face ever higher rates, and everything's going to crash. But more importantly, with the yen rising by that much in just a couple days, a lot of particularly hedge funds had borrowed in Japan because it was basically 0% borrowing rate, and then invested elsewhere. So they may have invested in Japan too, but they also invested over here in all sorts of things, whatever they thought was a good investment, a good trade. When the yen went up, it really meant that cost of carry, that cost of borrowing went up a lot for them. And so they had to quickly reverse themselves, reverse their trades, get out of that borrowed money, pay back that borrowed money and sell their assets. So this deep sell off. And it was because of a reversal in that carry trade. And that's how hedge funds operate. I mean, it's, things move fast. And so I think we saw the lows for this correction in the market. And the kind of conventional wisdom is that you were going to bounce because it got oversold, it went down fast. You were going to bounce, have a couple day rally or a few day rally, and then go to much lower lows. So you hear calls of 5,000, 4,800, 4,900 on the S&P, and some saying it's going a lot lower than that the top is in, etc. My guess is the lows for that correction are in, and that it'll take a little time here, but I think we're going to be off to the races again. We'll see new highs, if not this month, next month, probably this month though, and probably be. I think this may be the parabolic leg that takes us to the top. So my targets haven't changed. Well, maybe some have since we've talked. I raised my target on the S&P back in January to 7,000, and that's still my target for the S&P. My target for the Nasdaq was 20. I'd raised it to 23,000 back in January. I raised it in my most recent market letter in July to 24,000, and have a target of 55,000 for the Dow and a target of 3,300 for the Russell 2000. So those targets are all intact for me. I haven't changed a bit. As I said, this wall of worry that's been built just reinforces, I think, that we have a big, further run to go on the upside. I believe it's the top of a 42-year secular bull market that started in August of 1982. So I think this is a major top, biggest top in my lifetime, and that what will follow will be a big bear market and a very hard landing in the global economy.
Okay. Yeah, that's very helpful just to hear, your thoughts on the current, state of the markets. It feels like a lot has happened in a short period of time, at least with the narrative out there. There were a lot of people maybe who were pessimistic before who kind of got on board, it seemed, and then in the last couple of weeks they definitely turned bearish again. And it sounds like from here to the top, it could happen pretty quickly from what you're saying. It could be a pretty quick run from here to the top, even though it seems like we're a ways from your targets, obviously. But just, is that mainly with how psychology, kind of how we saw it flip very quickly to being bearish, can very quickly flip the other way, and then all of a sudden everyone realizes they need to get back in? Is that what's mainly driving it to these extreme blow off top type moves?
Yeah, to a degree, that's part of it. Certainly, you have people acting on their sentiment, so acting on their beliefs. So as this thing rolled over hard and more people jumped to the bear side, the more aggressive traders are shorting this thing, saying, "Oh, if this is the top, there's a long way down." And so you got people short, hedge funds or whoever, and you've got other people who have who, like you said, didn't really believe the rally anyway. They were kind of caught into it because of the momentum. They fought it all the way from October 2022, and then when it went to new highs, they might have started to get on board, but they were still saying that I don't know if it has legs. And then when all of a sudden it went from 4,800 to 5,600, it was like, oh, I'm missing something. I got to get on board. But they were talking in generalities. It's not everybody, obviously, but a broad group of investors were in, but they were in they were in there, but nervously in there, or in there without conviction. They were in there because the tape was going up and they were playing the momentum. As soon as that momentum disappeared, so did they. So yeah, I think like I said, you've built the wall of worry. The sentiment is back to a level that really is more more typical of a bottom, not a major bottom, but a bottom. And it's hard for people to understand that from a contrarian standpoint, but that is future fuel. If you've acted on your beliefs, you've gotten out of the market, or you've lightened positions, or you've gotten more defensive. When this thing reverses again and it moves towards new highs again, they're going to say, "Oh, this thing does have legs. I've got to get on." And as well as you're going to have short covering, etc. So I've made the case throughout my call here, from the bottom, that the last leg would be the steepest leg we've seen. That it would go parabolic. Parabolic means rather vertical. So you cover a lot of ground in a short time. Do I know that you can cover, like you say, a very big move from where we are now, 5,300 to 7,000 in 3 months? No, I don't know that. Can it happen in 3 months? Yes. Will it take 4 or 5 months? Possibly. I don't. The point is, it's going to be the steepest leg yet, which is pretty quick. And covering a lot of ground. So if in fact this is that final leg, that's what I expect to see the balance of this month, September, October, probably. I'm using the time frame as a, just a guess that it's kind of between now and the election. You're going to see most of the ground covered, if not all of it. Possible it goes beyond that. I don't want people thinking that I have some crystal ball that can say, precisely when it's going to end, because I don't. But I think it's going to be steep. I think it's going to be you're going to see a lot of stocks. It's going to be steep and broad, so you're going to see it play out in a lot of stocks, not just a few.